Unfortunately, Rivian's stock price is crashing. It's down 26% on the day following its earnings release, which has a lot of Rivian stock investors asking what's going on. So in this video, I'm going to provide a closer look inside Rivian, what's going on, what the disappointment is, straight from company management. So we're going to learn a lot. Let's jump right into these results. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, I mentioned the stock price decrease. You can see here Rivian stock price down 26.07% on the day following the earnings release. And so far, year to date in 2024, the stock price is down 51.3%. Of course, coming into the year, I made a video answering if Rivian stock was a buy for 2024. And I said no, Rivian stock was not a buy. The EV industry was facing stiff competition, price wars, and a surge in supply, all factors that are not attractive for investors. But let's take a closer look at what happened in the latest quarter for Rivian that sent the stock price down 26% in one day. So right off the bat, the company management talking about layoffs and highlighting that the number as part of their ongoing focus in driving cost efficiency, they announced internally today the difficult decision to reduce the number of employees by approximately 10%, a 10% decrease in employee count. And that will help because the company has too much capacity right now to match customer demand, which is not there. Customer demand is not growing, and Rivian is set up as a growth company. It's set up to prepare for increasing production, but customer demand is not increasing. So the supply versus demand, there's a mismatch here, and taking a 10% layoff is the first step in right-sizing the company. I wouldn't be surprised if there was more cost cutting to happen throughout the rest of this year. So the company also said they're going to launch their R2 platform, which they're going to give investors more details about on March 7th. The R2, which is going to be the successor to the R1 it's currently selling, represents the essence of their brand while targeting the significantly mid-size SUV segment, which is a massive market with limited compelling EV options beyond Tesla. So they're going to join Tesla, compete with Tesla here in the mid-sized EV market, which is a massive market opportunity. However, it's also a very competitive market. Of course, Tesla has shown how friendly it is to competitors, right? You've seen the aggressive price cutting by Tesla. How do you think Tesla is going to respond when Rivian joins it in trying to take market share away from Tesla? I don't think Tesla is going to be too happy about that. I see more price cuts on the horizon there from Tesla when Rivian eventually tries to join this market when the R2 is ready. So during the full year, Rivian more than doubled production and deliveries exceeded their initial production guidance by more than 7,000 vehicles. Relatively speaking, Rivian performed well in 2023. The EV industry overall, as I've been talking about for more than a year and a half now, was troubled. Surprisingly increasing supply, matching with decreasing growth in customer demand, led to a mismatch, and the price wars got underway, started with Tesla in late 2022. And so many of these EV companies had to cut production guidance, lower their targets for the year. That wasn't Rivian. Rivian actually told investors they were going to produce 50,000 units, and they produced 57,000. So 14% more than they initially guided. What makes that even more impressive is that Rivian didn't participate in the price cutting wars in 2023. So they hit this target, they exceeded their target without cutting prices. That was impressive. That's why I said Rivian performed relatively well in 2023. However, relatively well is still not great because the EV industry overall was not doing well at all. You could look across the board. EV companies struggled in 2023 because of that increase in supply, increase in competition, increase in interest rates. All of the macroeconomic factors were working against the EV industry, and those hurt all of the companies around that were trying to produce EVs. So here's an interesting statement from Rivian, and you'll get an idea of why the stock price is down. So gross profit per vehicle improved by approximately $81,000 when comparing with the fourth quarter of 2022. Still, they generated a significant loss on the bottom line. Even after improving the gross profit per vehicle by 81,000, they're still losing north of $40,000 per vehicle they sell. Losing $40,000 per vehicle they sell. That's a whopping number. That means they would need to price their cars $40,000 more expensively in order to just break even on each car. And you can't run a company on breaking even just on gross profit. So they've got a long way to go. And this was just a reality check for investors realizing, man, there's a long way to go before this company can even break even. But it's priced so expensively compared to traditional legacy automakers. It has investors questioning, why are we paying this much of a premium price for these EV companies that are not growing as quickly as they promised investors, or as some forecasts told investors they would. So that's really a difficult mismatch that investors have to realize here, is that these EV companies like Rivian, Tesla, Lucid, Fisker, and others are priced for the most part more expensively, multiples more expensively than companies like Ford, GM, Stellantis, and others. And those legacy automakers are profitable. They're generating strong cash flows, while these EV companies are losing tremendous amounts of money on the bottom line. With growth stagnating, we're going to see Rivian's forecast for 2024 is for no growth for 2024. And you're paying a multiples of a premium valuation for Rivian on the hopes that the company is going to grow aggressively over the next several years. So it's really, really difficult situation. You can understand why the stock price is down so much as investors, as the market is realizing, like, wait a minute, why are we paying this premium valuation again? So the company during the second quarter of 2024 is going to shut down operations to incorporate additional material cost improvements. So they're going to further reduce supplier costs. They're going to capture some flow through of commodity price improvements and optimize their manufacturing expenses. These steps will position them to achieve a modest gross profit in 2024. They've been telling investors that they will achieve gross profit in the fourth quarter of 2024. It will be impressive if they can actually hit that target in the fourth quarter of 2024. It will be impressive, and that could lift Rivian's stock price from these lows if they actually hit that gross profit target in 2024. But also tell investors that, hey, this isn't a one-time thing. Now that we hit gross profit in the fourth quarter of 2024, from here on out, we're going to be gross profit margin positive for the rest of our existence, right? That is what really investors would look for and would be happy with. It's not just hitting that gross profit margin positive in fourth quarter 2024, but also telling investors from here on out, every quarter will be gross profit margin positive. That will be impressive. That will be something investors will cheer. But for now, there's difficulties in the EV industry, Rivian facing those challenges, coming to terms with the fact that growth is slowing significantly in the EV market. Competition is heating up, price wars are heating up, and the prospects look dim for 2024. And you can understand why the stock price was down as much as it was following these statements from company management. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.